good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain with me, Snehisha. And for now, the market is making up its mind because earlier in the day, it slipped below the mark of 23,700, but managed to recover just from that mark. It's the day of the monthly expiry, so of course, volatility is indeed expected, and we did see that volatility come in as the India VIX has managed to spike a bit. Adani stocks, they have managed to jump quite substantially, whether it's Adani Ports, which is up over 4.5%, the top gainer at the index level, whether it's Adani Transmission or Adani Green, all of those stocks suddenly shot up on an intraday basis. Autos also charge ahead, so Maruti and M&M, Tata Motors will come up for you on the screen. That's one of the best performing sectors today, and some of those stocks clearly in the fast lane. What's also continued to gain is some of these broader markets names. Take a look at KFin Technologies. For many days on a trot, that has been in the green. Sagility, after getting some of the brokerage upgrades and initiations, is fairly active. And then Intellect Design has been fairly active for the last few trading sessions. So all of these stocks up again today on decent amount of volume flows. What's not up clearly is Asian Paints. It's one of the worst streaks that the stock has seen. It's trading at 3-4 year low level. Right now, of course, 52-week lows as well. So that stock clearly under pressure. And you also have Reliance Industries, which hasn't done too well this year. In fact, this is the first time in 10 years that perhaps Reliance Industries stock will deliver a negative return. It hasn't happened in the 10 years. Yes, one can argue that you need to add geofinancial services, but as a data point, Reliance Industries stock on a standalone basis has never been in the red on a YTD basis in 10 years. But perhaps if you go by the data, Kunal, it looks like this is going to be the first year that Reliance is going to be on the back foot.
Yeah, surprises this year. But I believe that this last leg of underperformance has actually come from Reliance Industries for the benchmark indices, broadly because of the major sell-off which had happened for the stock on the back of that FI selling. I think that broke the back for Reliance Industries. It still looks like the stock is struggling, even though when from 21st of November, when the index managed to rise up by 1,500 odd points on the benchmark Nifty, but even in that phase, Reliance Industries I think just about rallied 5% to 6% broadly from its previous swing lows, and now it's retested the previous lows of 1,200. So I think there is imminent weakness into the stock price, and that's one of the major reasons why you're not seeing the bounces sustaining for the benchmark indices.
Okay, Reliance under pressure on a YTD basis, also on an intraday basis today, and that's not panning out very well for the Nifty, because right now if you see where the Nifty is at, we are still sub those 23,800 levels, currently even below the 23,750 level. We've been trying to cross that 800 mark for some time now. We did open above that 800 mark. We inched some nice gains early in the morning, but nonetheless all of that seems to have simmered down right now. You have Sensex that's flat. Nifty Bank is the one to speak about, more than a 600 point cut coming in on an intraday basis just on Nifty Bank from the highest trading point, and 0.2% lower is where Nifty Bank is, almost very close to the day's lowest point as of now. India VIX continues to rise, 7% uptick coming in on the back of today's expiry. Broader markets also seem to be taking it on the chin today. A couple of more stocks to highlight in today's trade. Raymond Lifestyle is the one to watch out for rather, because we have a brokerage note from Motilal Oswal. Bullish note coming in. They've reiterated a buy rating target at 3,000 rupees per share. They expect a 12 to 14 growth in secondary sales as well. So Raymond is a stock that has been holding up smartly in today's trade, currently also trading with gains of around 1.5%. Interglobe Aviation is the next stock to also keep an eye out for. They've introduced long-range aircraft, and route and network opportunities are being explored by the company as well. So that stock holding up pretty smartly on that commentary, roughly 2% higher. And NTPC Green, also watch out for some volatility. That stock has been seeing some volatility today, and currently 5.5% lower on the back of that 1 month lock-in period ending today. That lock-in is going to be opening. It has rather opened today. It's a recently listed company, and on the back of this lock-in opening, it's been seeing some volatility. But on that note, let me also welcome Sunil Subramanian, our market expert, on board, and we as always have Nuresh joining us with Kunal as well on the show. Mr. Subramaniam, thanks so much and good afternoon and thanks for joining us on the show. First of all, the season's greetings to you and wishing you a very happy new year in case we don't interact with you once again before the end of the year. Just want to draw your attention to a couple of these names in the auto space. Auto seems to be a sector that is doing pretty well, at least in today's trading session. On a year-to-date basis, however, auto has not done all that well, but not too bad either. What's your outlook coming in on these select auto names that are doing pretty well in today's trade?
See, I would say that if you look at the composition of the auto industry, right, I think that the high-end vehicles, right, are the ones which are doing well, the SUVs. The K-shaped economic recovery is reflected very well in the auto space. And I think that those who are leaders in the SUV segment, right, who are coming with new launches, those are adding a good EV touch to their vehicles with hybrids and EVs. Those are the ones which have a good future, and I think are that pricing in of the future good prospects. I expect this K-shaped recovery to sustain. I think the broad-based auto sector, for example, like two-wheelers and entry-level cars, would still continue to face challenges, but we are yet to see the impact of the monsoon translate into a good demand for that level, right? The second is that auto, again, apart from the names looking at today, the auto is not a single segment. Auto has a capital goods segment through the commercial vehicle piece. It has an export segment through the auto components piece. It has a mass retail, I would say, through the two-wheeler place and in the high end. So, and then you have an agricultural, monsoon-related tractor. So, auto as a whole is a very mixed pack. And I think that the high end will continue to, through the new year, do well. So, I would say that that's what I think is doing well today. And I expect that momentum to continue for the next year.
Okay, so that was about the auto space. But Naresh, comment on the underperformance of the banks, ICICI, Axis, HDFC, everything tumbling away.
So we've been in a range-bound move for all the indices. So in the last 3 weeks, what we've noticed is one day of volatility where we see a 500, 600 pointer range on the Nifty. And the next 4 or 5 sessions, we continue to be in that band. So for now, that band is very similar, 23,500 to 24,000 on the Nifty. Same goes on the Bank Nifty. ICICI Bank, which was closer to an all-time high, has come back to that 1280, 1300 mark. But 1240, 1250 remains a support. Same is the case with if you pick up a HDFC Bank, which is still above the 1750, 1800 band, just struggling around that area. Axis has been an odd one in terms of the stock has broken down below that 1140 to 1130 mark, which was a support, which was being held on for the last almost 6 to 8 months. And next support is around 1030, 1050. So at current levels, we wait for a reversal signal in Axis Bank or a breakout signal in ICICI HDFC. But for now, they're just stuck in a band.
Okay, that's the view coming in on some of these private banks. But Mr. Subramaniam, coming to you, give us a sense of what you are making about all of this banking and financial action heading into 2025. Do you believe NBFCs, after the year of pressure that they've seen, could be in for some recovery, and that is something that could be shining bright in the financial space? Or you believe either PSUs or private banks could be leading that rally?
That a combination of private banks and NBFCs would lead the rally because one, as you mentioned, they have underperformed the overall market and the Nifty also. So I think the numbers, the earnings numbers are fairly decent. And I think that if you look at it from a value pick, is probably the top value pick is the private sector bank in the market, followed by the NBFCs. The reason I say that, I was alluding to my previous answer to the auto pack, is that I think the story of India is one of the high-end consumer, right? Whether it's auto or it's in consumer durables or consumer discretionary. So that requires retail financing. And I think that financing is where private sector and the NBFCs are at the forefront. And NBFCs also, you have gold loan NBFCs, you have microfinance, you have a whole range of things catering to this. So I think that the pressure on the margins for these people will ease over the coming year. And I would consider that top quality private banks and NBFCs would be among the better bets to place on for year 2025.
Point taken. Kunal, but comment on the charts of a couple of these very active names. Godfrey Phillips, again, in the last few minutes, it shot up materially. And then Intellect Design has been on its own trajectory. I mean, it keeps on having one, up day and one down day, but nonetheless, today up 13%.
Yeah, I think Intellect is something which is looking very attractive. The stock is now seeing second positive day over the last 3 days and excellent volumes in the last 3 days. So even I think yesterday, rather on Tuesday, when the stock was retracing a bit, I was going through negative price correction. The volumes were pretty much on the higher side. Today, when the stock managed to break past about the 2 days swing high, which was I think around the 975, 980 mark. Post that, we've actually seen the stock and the volumes improving significantly for Intellect Design. So which means that the cumulative chunk of the last 2-3 days of volumes indicate that this could be a very strong trending move for Intellect Design. It's also bounced back from its longer term averages, just about that 800, 850 levels. So that's also another positive factor for Intellect. I would believe that the stock after this leg of up move, even if it goes into a phase of consolidation, should be good for another 100 to 150 points on the upside. But that could probably happen in a more positional manner. So I would believe 1150, 1170 could be a decent target for Intellect. Godfrey Phillips could be something as a wait and watch, because this is the first time we're seeing the stock bounce back in the last 2 months of this price correction. The high the stock had made in the month of September was around the 8,500 levels. Post that, we've actually seen the stock correcting to 5,000 mark. That was the low Godfrey Phillips had hit last week or so, and from there we're seeing a bounce back. So this could be more of a relief rally going into the expiry for the stock. If there is a follow through price action on a similar kind of a volume note, then I would believe that there could be a signal of a major trend reversal for Godfrey. But as of now, I would probably just keep it under the radar rather than initiating any trade.
Okay, so wait and watch call coming in for Godfrey Phillips. Naresh, coming to you, on a year-to-date basis, a couple of these stocks have been very beaten down. The likes of Vodafone, IndusInd Bank, RBL Bank, with cuts of anywhere between 40 and 50%. Are you spotting any kind of reversal or recovery on the charts for these three names, Vodafone, IndusInd and RBL, going ahead?
So out of these names, RBL Bank is one which is showing some bit of reversal signals. For the last 2 months, we've seen a bottom around 151 and then another time 148. And very recently, 2 days back, we made a bottom around 150. So there have been 3 bottoms around the 150 mark, trying to make a recovery. And 180 is the interim high. So for now, it's a 150 to 180 band. So would expect a recovery towards 180. And if that crosses, then we get into a longer term trend change. IndusInd, on the other hand, has seen many false starts, tried to make a recovery, take a pause around 1,050, did not, and now the trend still continues to be low. Once it sustains back above 1,000, it could be on radar for a recovery. So for now, out of these three names, RBL Bank is the most interesting one.
RBL Bank is the most interesting, 2375, 750 rather on the Nifty. We'll take a quick break and we'll be right back for the last 45 minutes of the trading session.
Hi there, welcome back to Closing Trades. Thanks so much for staying tuned to ET Now. Let's take a quick look at what the markets are up to, if there's been any sort of recovery when it comes to the Nifty, and none at all. Continues to be below that 23,750 level. Very flat, nonetheless trading with a slight positive bias given the expiry moves that we are seeing today. But Kunal, coming to you, give us a sense of what the broader markets are looking like, at least on a technical perspective heading into next year. We've seen a roughly 20-25% return on a year-to-date basis. Do you believe that this double-digit return in the higher 20s could be possible into next year as well, given that we have a lot of events that are also lined up early next year?
See, I strongly believe that potentially the markets in the next coming year, calendar year, could be more of two-paced. For example, we were discussing this in the morning that over the last 6 months we've seen many sectors being at the brunt of some sharp selling. Now, it started off with PSU stocks, then defense names, PSU banking names. You had a point where many of the private sector banking stocks had fallen very sharply. So I think except for the two stocks, the two prominent names on the private sector banking stocks, we've seen most of the stocks going through a correction. Then came a phase where the FMCG indices, the auto index, these sectors have also managed to see a sharp correction for themselves. We've already seen media index being at a multi-week, multi-month low quite substantially over the last many months. So which means that over the last 6 odd months, the sector health had deteriorated significantly. Now, generally we see this pattern lasting for a period of 6 months to 9 months on an average, which means that maybe a good part of the chunk of the underperformance from the sectors is now done. There could be a possibility that there may be a trickling down effect into these stocks and sectors for the first 2-3 months of the calendar year 2025. But I think post that, I would actually expect a very strong recovery coming back into many of these underperforming stocks and sectors. So I broadly believe that the second half of this year specifically, I think could be very substantially positive for many of the sectors, and especially the ones which have been huge underperformers for the last 6 months to 9 months broadly.
Okay, point taken. So that's a view coming in on some of the stocks and sectors, and of course how the broader markets are really turning out to be. Naresh, one pocket which is outperforming today is Adani group of stocks. I mean, take a look at ports, that's up almost 5%. Green, energy, transmission, power, pick up any of the name, it's in the green right now. What within the pack would you still recommend a buy?
So out of that, Adani port still looks interesting for the fact the stock is still lower than where it was around the cap down day. So out here, the trend has been strong in the port sector as such. The stock, if it sustains 1250, would be a reversal and could go up to 1400 as well. Would keep a stop loss below 1200 on this.
Nuresh, thanks for that view coming in. Mr. Subramaniam, I want to get your outlook on what the consumption space could shape up like heading into next year, particularly now that we've seen this frenzy coming across the quick commerce space. By next year, by end of next year, we're expecting to see another player get listed in this space and give competition to the two stocks that are already listed. Do you believe that this kind of frenzy that we've seen in 2024 across and around this entire quick commerce space will continue to build up into next year as well? And on the back of that, what are you making of the impact on your traditional big box retails or the mom and pop stores?
I think that overall, sorry, that was for me?
Yes, sir, please.
So overall, I think, see, this quick commerce, the kind of rapid development that's happened will sustain for the first half of next year, but by second half, it should all cool down. And one of the main reasons for that is the changing demographic of the country, right? The number of young people going up, also the rising per capita income. So today, if you see that this year we're probably at about 2,800, next year could be a big year. 2025, I would say we will hit the $3,000 per capita income mark during the course of 2025. But this kind of a growth in per capita income has come at a very, very sharp diverge between the lower poor people, the lower middle class, and the upper middle class and the rich. I think that gap is widening. Yes, the poor and the lower middle class lives are improving, but the ones at the higher end are improving much faster. So when you have youth plus rising per capita income at this level, then you have a strong thing for where time is of the essence, quick commerce, high-end value goods, quick decision making. And bear in mind that this income is not just going to get spent, it's also going to get saved. So I think the right story for next year to me is the rising per capita income and the continuing disparity. And hence, consumption for me is in the first half is a consumer discretionary play, where I include consumer durables, I include auto, I include realty and housing, right? But the second half, and I expect the budget this time to be more populist than in previous years, with two big elections up ahead in the coming years in UP and Bihar. I think the government has learned the lesson from Haryana and Maharashtra. So you'll see a lot more money now being gone through what I call as developmental populism. They'll direct it in a developmental manner, but towards the bottom end. So the second half of the year could be the year of consumer staples, and I see that will recover next year. So it's overall, I would say consumption is a good pick with the initial tilt towards discretionary consumption, and quick commerce, high-end retail, all of these feature within that.
Development, is the stuff that really needs to watch out for in terms of the populism, whether the spend actually is something which is going to have a multiplier effect or not, because yes, the broad portion of the economy or the mass segment is a bit underperforming right now. But what's also underperforming is Page Industries, a cut of almost 4%. Bandhan Bank is down and out. Hindustan Copper is in the red right now, and even some of the metal names like NMDC, Steel, etc. are under pressure as we speak. For the month gone by, if I have to look at the best performing sector so far, or even the stock for that matter, it clearly is real estate by a margin. Oberoi Realty, Lodha, Raymond Prestige, these are your outliers. Even Godrej Properties, even though DLF, Sobha, Brigade, they have underperformed. Nuresh, is it very diverse in terms of the stock specific action within real estate, or is it going to be a case that everything will rally?
So it's getting divergent for the last many months. So if you look at Oberoi Realty, that's been a leader. The stock has, say, over the last 1 month done well, over the last 3 months, as well as over the last 1 year. And at the same time, you have something like DLF, which is sideways for the last almost 8 to 10 months. You could pick up a Prestige, you could pick up a Brigade, and you would see similar price action where they've been sideways for the last 6 to 8 months. So selective moves are happening only in few names, not across the board. So we are not in a time where every real estate company goes up, which was happening back in 2023-24. So for now, it would be more selective and would wait out. It could be some more months of consolidation before a breakout move or a breakdown.
That you're coming in on Nifty Realty, but on that note, Mr. Subramaniam, thanks so much for joining us on the show and speaking to us and joining us once again this afternoon. But let's shift focus and talk about the entire aviation space. How is the Indian aviation sector prepping for the year that's up ahead? Will leading airlines expand their wings across the globe? Let's go across to Samir for more details and update on what the aviation space could look like in 2025. Samir, take it away.
as we are set to enter year 2025, the new year's Indian aviation sector, which is going through a positive momentum, and the airlines are having high hopes with the new year. For example, Vinay Dubey, who is the founder and CEO of Akasa here, he has made a strong comment that actually this is the golden decade of Indian aviation sector. This is the golden period where not just for the next year, but the entire decade, Indian aviation sector will be registering positive growth and stability. And not just this, the air travel is going to become incrementally accessible for a greater numbers of Indian customers, and also the stability will be there across all the sectors, and major of the airlines are going to be benefited with the growth in this sector. In addition to this, Vinay Dubey has also mentioned that the sustained growth will be registered in the business class segment, in the leisure travel segment, and not just Akasa Air. Even Indigo is also having high hopes with the next year. Indigo has said that so far they are quite confident they are going to register 112 million customers by year 2024, and with the new aircraft that are likely to be inducted in the fleet of Indigo, they are going to keep up this momentum. Indigo has said that they have already ordered, they have placed the order for A350-900 aircraft, and they are soon going to induct XLR, Airbus XLR, and this will help them to expand their footprints on the international sector. They will get in more customers. And Indigo, Akasa, or even Air India, SpiceJet, the way these airlines are actually registering the growth, this shows that in aviation sector is going through a good period. The positive momentum is actually helping the airlines and the other stakeholders to take a chunk from this growth trajectory.
Okay, so the golden decade of aviation just gonna continue. It's been cold in India in parts. There has been a freezing winter wave, but it was sun was shining bright. When it comes to Australia, it was a scorching day at the iconic MCG with temperatures hitting 38 degrees Celsius during the day. The heat was evident both on and off the field, and you know what I'm talking about. It's the latest act coming in from Virat Kohli when he bumped into debutant Sam Consnas during the play. This led to a fierce war of words between the two, with teammate Usman Khwaja and the on-field umpire stepping in to separate them. A couple of overs later, the 18-year-old smashed Jasprit Bumrah for a 6 and took him to the cleaners with an 18-run over. Kohli's shoulder barge into Constas didn't go down well, with many veterans feeling that Kohli's actions were unwarranted and overtly aggressive. It is now learned that Virat Kohli has been slapped with a level 1 offence and fined 20% of the match fee and a 1 demerit point coming along his way. But with that, we are getting a little less aggressive in the markets. It's clearly coming off the highs. Let's see how the last 30 minutes of the trading session pan out. It is the expiry and the impact will come in at 3 p.m. Hopefully, we'll be just back to catch that after this very short break. Welcome back. Well, for the market, it's holding on okay. Actually, we've been in a very flat range with very low volumes. Kunal, is that going to be the case for the coming week as well, or do you expect as we start the next year, there'll be a lot more action, because right now it's low volumes? I think everybody has just shut shop and gone home except the three of us here.
Yeah, we were discussing this in the morning that it's going to be so dull and boring throughout the day. This is generally the case for New Year's or end of a calendar year, because I think most of the global traders, they generally are out in terms of vacations, so the volumes drop down significantly, and that's why the trading activity drops down significantly. So I think except for that initial pop and the I think a mid-market pop, correction for the indices, largely we've been just stuck into a very 40 or a 50-point range for the Nifty. That itself tells you the entire story that the markets have been so listless. Generally, we've seen markets picking up pace from the 2nd or the 3rd of January. That's where I would believe that the markets would start to pick up maybe some sort of a trend for the indices as well as for the overall markets.
Yeah, pretty much flatlined literally for the market. It's been very, very range bound today. Having said that, what's clearly outperforming is Intellect Design. There's a 17% move right now, but separately, the entire space of manufacturing is something that has been catching attention. We have Mayuresh also joining us in the show, so let me toss it across to him. Mayuresh, whether it's the fact that LG is going to come to India with its IPO, whether there is that, buyers out when it comes to the Hisense as well, with respect to what's happening to EPAC Durable and all of that, conversation there, or the fact that there is, private placement of hire possible in terms of the people seeking to buy a stake in that one. There's a lot of action when it comes to consumer durables and the entire ecosystem. Do you expect this is something which is a theme which is expected to play out even more in 2025?
Afternoon, Anisha. I think that is a high possibility because what you probably expected to see in terms of government capex actually ramping up in 25. I think the budget will probably lay testimony to that number. For the 11 lakh crore budget that has been placed last financial year, it should be significantly higher over the next few years, which basically means the impetus that the government is trying to probably get through in terms of its public capex, and more so ever in terms of investments done in infrastructure, in manufacturing, the various PLI schemes that have probably got announced, and a large part of that construct actually enabling a lot of manufacturers to probably look inward and diversify their supply chains, makes this space very, very interesting. Now, within this space itself, I think a few spaces that might do well. I think we've already spoken about power as a theme, right? But within power, the flue gas desulfurization players, the equipment that they'll probably make, there is a deadline by March 26 that you'll have to probably suffice with in terms of ensuring that the old equipment is taken care of. And therefore, I think the expectation in terms of the market size of 1 lakh crore, which is their orders given to the tune of 10 to 15,000 crores, there is huge opportunity within this specific space of capital good manufacturers. So a couple of players within the listed space, which can probably do well in terms of flue gas desulfurization as a space. The second element in terms of the core consumer durable space, the expectation in terms of significant growth catching up. And yes, we've been hearing about urban consumption probably slowing down, but for certain niche price tags and price elements and certain key pockets within the space itself, the expectation is that there should be significant amount of growth on a durable and a structural basis over the next few years. So this space probably looks a tad bit more interesting. And the third is some diversified players where the dependency on imports probably might go down, where there is a huge opportunity in terms of China plus one that can probably get played out. And with capacities that are getting played through, supply chains which are getting probably diversified, I think a few spaces within the larger manufacturing piece might actually do well. So very, very interesting piece, Anisha. I think a few themes like these might actually do well over 25, 26, 27. So I think the next 2 to 3 years might be a little bit interesting within the sub-segments of this entire capital goods growth, consumer durable.
Okay, thanks for that view coming in. Mayuresh, just coming back to you, I want to get your view on this interesting anomaly that we see every January called the January effect kicking in when it comes to stock prices. Also back home, January is going to be a very busy month because you have earnings that will be kicking in for the third quarter. Abroad, you will have Donald Trump who will also be taking the reins back once again on that on the administration front for the government. Tell us, amid all of these fluctuations, what are you expecting the month of January to look like for our benchmark?
No, so you're absolutely right. There are too many moving parts, which means Jan will be equally volatile as we speak. And the base case scenario is obviously going to be earnings. So come Jan 8th or 10th, you'll have the Q3 numbers starting to flow in. And obviously, I think not much is expected looking at how Q2 has probably played out. So I think earnings expected to remain soft. And therefore, I think the market's reaction is going to be very, very interesting as far as earnings is concerned. Again, I think the entire Trump rhetoric that is probably happening at this juncture, the kind of sell-off that we're probably seeing in terms of FI/FPI outflows across the emerging market space. One must really understand that to probably ensure that manufacturing comes back to the US on a very strong footing, though the statements might come through, I think to put that in action might take time because it's very difficult to replicate a lot of manufacturing processes and have that arbitrage of labor and power along with that. So I think the rhetoric might have played out in terms of sentiments when Trump resumes office. But the rhetoric on ground in terms of the tectonic shift that is probably expected to happen might not happen on a fast track mode. Having said that, I think outside the US, our opinion still remains very, very strong that India still remains one of the best placed markets, both in terms of economic stability, political stability, and the path in terms of our fiscal glide path that we probably got. So I think one of the better managed economies or the best managed economies, if I would say, outside the US, will mean that at some point of time, FIs will have to come back. So yeah, Jan might be volatile to answer your question. You have too many things to look up to. Earnings might slow down, but I think there is every possibility that as we head into the first half of the next financial year, certain pockets, earnings degrowth, which has probably happened, might start bottoming out. And there might be a strong base case scenario for India probably to get re-rated outside the US.
Point taken. Yes, January might be a bit volatile. Talking about earnings, perhaps IT is going to see another weak quarter just because of furloughs, and from there might be a bit of recovery. And of course, the other thing to watch out for is just ahead of budget, that infrastructure in the entire public sector space starts to rally, whether that happens this year or not. In fact, taking that question to you, Naresh, what's the top recommendation or the best way to play these two themes, IT as well as public sector entities?
So in terms of IT, the name would be to accumulate something like Wipro, which is still lower than the 2021 highs. The stock was at 360 back in 2021, now at 300. So that is where there's a lot of catch up left. Infosys could be interesting on a gap down going forward on results in that case. In terms of the other side, I would wait out in the other segment.
Okay, Naresh, thanks for the view coming in. While we are talking about stock recommendations, Kunal, coming to you, what's your BTST trade for tomorrow?
So I'll go with two buy calls. The first one is one ICICI Pru. That's a chart which I believe is likely to form a near-term bottom for itself. We've seen the second straight day of a price recovery for ICICI Pru, and that's a stock which I would believe should be good for at least 690 over the very near term. Stop loss could be kept at 640. And from the mid-cap arena, it's Oberoi Realty, which is looking very attractive. The stock confirming a consolidation breakout. Back again about the 2,300 level, so we'll look out for targets in the range of 2,400, stop us at 20 to 40.
Okay, so those are Kunal's BTST trades. Absolutely not surprised to see Oberoi Realty make it to your list, Kunal. I believe ITC and Oberoi Realty are your two current favorites right now. But on that note, Naresh, you also weigh in and tell us what are your BTST trades for tomorrow.
So one is a bounce back trade on PFC. The stock is corrected quite a bit in the near term. Stop loss at 457, target price of 470. Second is a buy on Sun Pharma, which has been flat for the last many sessions, but a lot of related strength. Looks like a breakout move in the making. Stop loss at 1820, target price of 1860.
Okay, so the only takeaway for me from the BTSC trades is that tomorrow is still a working day and not a weekend yet, though mentally I think all of us have checked out, but it's another working day. Thank God it's Friday, so the end of the week, but definitely a working day. But Naresh, wanted your sense, or rather, let me take it across to, get more details as far as ITC is concerned, because that stock is under pressure, or rather has been doing quite well off late. And the reason, of course, is that, come the start of next week, there is that entire demerger process which is going to kick in. I believe the record date for that is 6th Jan. It's going to be effective as of 1st Jan, and the last date when you can perhaps buy the stock so that it is there in your account is 3rd January. So just ahead of that, there is a bit of an activity on that one, though right now it's coming off a bit. Mayuresh, what's your take on ITC? Could 2025 belong to some of these so-called dull FMCG names?
Can be a possibility, Anisha, but my view is a little bit divergent out here. I think two things. One, come Jan, you always start hearing about what if the sin tax probably starts going higher. So that always weighs on ITC and the cigarette business in particular. Though we've probably seen an elasticity of demand in spite of the hikes that have happened in the past, the street is always fearful of any potential increase in the sin tax that can come through, which can probably have some element of impact in terms of the core cigarette business and the cash flows thereof. The second element that it probably got, the other parts of businesses of ITC are doing well. Obviously, you've got the demerger as far as the hotels business is concerned, the agri trading business is doing well. But they've always maintained this stance in terms of the new businesses that they want to probably enter. A large part of cash is probably going to get deployed there. So I think the free cash flows that are probably going to come through, specifically from the cigarette business and partly from the other FMCG business as well, which probably might not get reinvested into the business, will get diverted in terms of the new businesses that they probably want to ramp up over the next few quarters. And therefore, I think over the past few years, as we saw the transition happening from cigarette to FMCG to hotels, I think that similar transition might happen in terms of earnings, purely based in terms of cash flows being deployed. So my own sense is that the stock might probably get stuck in a consolidated range bound manner. Numbers might be reasonable, but I think because of the developments that are happening internally as far as the business construct is concerned, the price movement might probably get capped, I guess.
So that's the view coming on ITC on the back of fundamentals. Nuresh, also take us through through a tech check of what the stock is looking like on the charts. And apart from ITC, also talk to us about some pure play FMCG names, the likes of HUL or Tata Consumer or Godrej Consumer that, for instance, have seen some kind of slowdown getting built up on the charts. Tell us if 2025 could hold a reversal for all of these counters purely on the technical basis.
So first, starting with ITC, the stock has made a base around this 460 mark, three bottoms over the last few weeks, and trying to cross above 480. Could be a breakout move going forward over the next few weeks, and maybe possibly test that previous size of 520.25 also. So positive on ITC. In terms of the FMCG basket as such, you look at Hindustan Unilever, etc., would wait out for another 5-10% decline, and that is where they'll all become interesting. So if you go back to, say, an HUL, the stock would, at say 2200 odd levels, would be back to pre-COVID prices. Same is the case with a lot of other names. So Tata Consumer, for example, broke out around this 800, 850 mark last 1.5 year back. So 800, 850 mark becomes a good entry point. Same is the case with Godrej Consumer, which saw a big breakout happen around this area, only around 1000. So out of the current stocks, Godrej Consumer looks interesting at current levels to accumulate slowly between 1000 to 1050.
Godrej Consumer is one of those better looking FMCG names for now, but it's been an interesting year because of the data stats that we've got right from the IPO to what India ordered in terms of Swiggy, and it was yet again biryani that was topping the charts. But it's interesting to chalk out how the India really used a quick commerce space and what they Instamarted in 2024. My colleague Sumita is joining us with that interesting analysis and data points. Sumita.
In fact, just 2 days back, we were talking about what Indians really ordered, and of course, biryani formed a huge part of that. But let me take you through some trends as far as Swiggy Instamart is concerned. So Delhi, Dehradun users, two users from Delhi and Dehradun, they seem to be the big spenders on Instamart. In fact, both of them spent over 20 lakhs each all year round. In fact, as far as the orders on Instamart are concerned, in fact, top three must-haves for Indians seem to be milk, curd, and guess what? Dosa batter. One in every fifth order either had a fruit or a vegetable involved, and it was a Hyderabad user who actually spent 35,000 on mangoes. One in every 140 orders had a sexual wellness product. So that's a overall snapshot of what India ordered. But you'd be surprised to also know that Instamart turned out to be a pet's best friend as well, because a pet lover from Mumbai splurged over 15 lakhs on pet supplies. But let's also take a look at how India ordered in terms of timings and time slots. So 4 a.m. to 7 a.m. was the timing for breakfast essentials, ordering breakfast essentials. Then 10 p.m. to 4 a.m. was all about ordering ice creams, cold drinks and chips. And then 8 to 9 p.m. was for sanitary pads, and which is what also saw a lot of people ordering pain relief medicines and ointments as well. In fact, guess how much was the cheapest order of 2024? It was 3 rupee pencil sharpener. In fact, when we speak of quick commerce, it's festive season that really gives it a push. So 2024 was no different. It was an Ahmedabad user on Dhanteras who spent over 8 lakhs on gold coins. In fact, the fastest delivery during the festive season happened from Kochi in just about 89 seconds. And overall, Indians spent 45 lakhs on brooms on Diwali day. In fact, 8 lakh Rakis were delivered across the country. Now let's take a look at what each of these cities are ordering. First up is Bengaluru. Well, Bengaluru ordered 1.8 times more wine in shot glasses than other cities, and of course ordered over 2,72,000 toothbrushes. Well, as far as Mumbai is concerned, Mumbai spent a lot, over 8 lakh rupees in just tonic water. And Delhi, well, Delhi spent around 60 crores on noodles. So it's not just biryani, but I think all noodles is giving tough competition to biryani as well. And then, of course, Delhi ordered the maximum number of potato chips as well.
Thanks for that. Very interesting takes coming in and takeaways coming in from what India has been insta-marting over the year that went by. But Mayurish, let's keep it going with everything that we've been hearing about Swiggy. Lots of news flows, recent launches, a premium membership coming in. They've now gone ahead and launched a quick food delivery. There's Bolt. Lots has been happening around the stock. JP Morgan has also gone ahead and given a target of 730 rupees per share, the highest ever that we've probably seen by a brokerage house. Do you believe this kind of exuberance for this a company could continue going ahead? Because every time Swiggy tries to launch something, you have Zomato that's always got a one-up on its peers. Zomato is always innovating and launching new things as well. Put both of them against each other and tell us, if you had to pick one from this pack, which one that would be?
I think the trends are evolving. If you probably look at numbers again, right, the average order size for Blinkit was close to 660 rupees. And there were almost 90 lakh customers who have transacted in the previous quarter. Similarly for Swiggy, I think the order size is probably going up. And the order matrix in terms of number of customers going up every passing quarter. Now the trend is obviously definitive in terms of how numbers will stack up. Which brings us to the next question in terms of how competition will play out. Obviously, you've been hearing of Amazon, you've been hearing of Reliance Retail. There is their unlisted player, Zepto, who's been burning cash. But again, I think making a strong presence felt. So the kind of business dynamics that probably get required in terms of dark stores, both companies expecting to have almost 1,000 dark stores as we head to the next couple of quarters. The expectations in terms of Swiggy's food delivery business breaking even over the next 3 to 4 quarters and Instamart a couple of quarters after that has given the boost to the stocks and narrowed the gap that it had with Zomato as well. But to a large extent, again, I think specifically in the case of Swiggy, because Zomato has actually proven itself in terms of turning around the entire Blinkit business, hyper-pure, close to breaking even as well. And therefore, I think as these dynamics improve and evolve even further, with cash on their books, both their books, in fact, Zomato as well as Swiggy, there is plenty of opportunities organically and inorganically for them to grow. However, for Swiggy to probably re-rate from the current levels will mean that the next 2 quarters, the losses actually start receding, both on the delivery business as well as the Instamart business. And if that probably starts happening, my own sense is that the momentum will come back into the stock. Till that point of time, in my opinion, both the stocks are priced to perfection, largely pricing in the benefits coming through, at least over the next 2 quarters. In Swiggy's case, if this starts coming through in the next 2 quarters, I think the momentum in Swiggy can be greater than what we've probably seen so far.
Momentum in Swiggy has already been better. If you look at the last 1 month performance, Swiggy has been up, almost in double digits, 20-25%, whereas Zomato is actually down in 1 month. So you know where the momentum lies. But the momentum has been very off when it comes to Asian Paints. In fact, that stock is sitting at almost a 4-year low. It's at, of course, 52-week lows right now. But even if you pull up a longer term chart, I think it's the lowest level that we have seen on that stock since 2021. I'll get a chart check going on that one. But before that, Mayuresh, help me complete the point. We have seen the so-called, fundamental impact come in on the stock, the time-wise correction and all of that. But do you think this can continue for a long time, or do you expect that, this is one blue chip that has come out of various headwinds and various competition earlier as well, and it's bound to do that yet again?
It is a strong possibility because I think leadership stocks like Asian Paints will evolve and come back very, very strongly. Obviously, I think the cyclical argument that probably stays put is because of competition that has probably come through. Specifically in the premium segments that Asian Paints operates out of, they have sought probably price cuts happening. And volumes have also not met market expectations. And therefore, I think a combination in terms of earnings not coming through, along with pricing not remaining in their favor, largely reflected in earnings as well, is probably getting played out in terms of stock price. My own sense is that this might continue, at least for a couple of quarters, because you probably expect it to see some element of consumption slowdown actually play out on numbers. Obviously, input costs for the industry as a whole have stabilized to a large extent. But outside crude derivatives, I think labor costs have started inching up. So I think in terms of repainting demand, that is inching up slowly and steadily as we speak. But competition is also probably coming up, both in terms of dealer network, distribution network, so on and so forth, as well as pricing. So my own sense is that the company will find out ways to probably come back. Earnings will at some point of time will revert. But I think the next couple of quarters might be a little bit patchy, and therefore I think the first half, the stock might still be an underperformer compared to the product.
On Asian Paints?
It's still looking very weak on the charts, but then, this is almost like the 15th or the 16th straight week where the stock has fallen very sharply. And, after some point of time, the stocks are bound to get back into a deep oversold territory. And I believe somewhere down the line, the stock is now nearing that deep oversold territory on the charts. Because of that consistent sell-off the stock has seen, the divergence from its 200 moving averages. Looking at the divergence, the 200 DMA is placed almost 350, 400 points higher than the current market price for the stock, and that's a divergence of almost 15 to 20%. And remember, Asian Paints has been a stock which historically over the last 5-10 years has been considered to be low to moderate beta, and such kind of steep divergences, they generally don't last for a longer period of time. What matters over here is now wait out for a point when the stock starts to get back into a recovery phase. So the first round of a breakout, which the stock would probably indicate, that could be a signal that a near term as well as a major bottom could be in place. I would believe that maybe around 2350, 2340 could be a breakout point for Asian Paints. So I think if the stock shows that signal over the next few weeks or over the next 1 or 2 months of a potential breakout about this 2350 odd mark, that could be a very good level to start accumulating as well as going long for Asian Paints.
Yeah, so it's traditionally a low beta stock, but given the fact that, this divergence has really continued and you've seen a stark underperformance, when it does recover and that 2350 mark is hit, is it going to be a steep rally or is it going to be a very slow recovery and you'll get enough time to buy the stock?
No, you'll get enough time to buy the stock. So what happens is, Anisha, when stocks change their beta, that's where they eventually form a major bottom or a top. Now, for example, if the stock was on the upside and the beta changes, then we are looking at the stocks forming a major top and then from there going to a reversal process and then a trend starting off. I would expect very similar for Asian Paints going forward. So whenever that change happens, say assume over the next 1 month, if we start to see that change happening for Asian Paints, the stock breaking past about the resistances, that's where we believe that a trend would seep in. And long-term traders, investors who've been waiting for the stock in terms of risk reward to start buying. So I would believe that they would be absolutely okay buying the stock maybe 50-60 points costlier than the current market price, but they would want to buy or enter into the stock price when there is a lot of confirmation that I believe could probably trickle in once the stock breaks past about this 2350 barrier.
Okay, that's the view coming in on Asian Paints on the charts. Going ahead on that note, Kunal, Naresh as well as Mayuresh, thanks so much for joining us. Let's start wrapping up for the day. It's been a volatile day for us. Actually, not much happening when it comes to Nifty because it's on the back of this expiry. We were expecting some more volatility, but let's pull up a Nifty and take a look at what the closing rates are looking like for the Nifty, and it's been rather range bound. When it comes to the Nifty, it's still at 23,753 levels and 756 to be precise, looking okay right now above the 23,750 level, but let's see last few seconds of trade if we're able to hold on to the 750 mark. Sensex absolutely flat, nonetheless above 78,500. Advanced decline ratio slightly tapered towards the declines in today's trading session. Some Nifty names that have done phenomenally well today: Adani Ports 5.5% higher, M&M, SBI Life, Maruti Suzuki, Shriram Finance, Sun Pharma, all of these trading with gains of more than 1.5%. On the flip side, Asian Paints, Titan, JSW Steel, Tata Consumer and Nestle are the ones that have been dragging the index lower. India Wix seems to have cooled off a little bit, but nonetheless 6.2% uptick coming in exactly at 14 is where India Wix is right now. And broader markets also continue to be taking it on the chin. Nifty, mid cap and small cap not doing all that much in today's trading session. In fact, a very solid recovery coming on the mid cap index, from deep cuts coming back to gains. Small cap, however, continues to languish. Very quickly taking you through the sectoral gainers and losers have been in today's trading session. And what has done well today is Nifty Auto, followed by Pharma, PSU Bank, Energy, Realty and Financial Services. However, what did not do well was Nifty Media, FMCG, Metal, Bank. These are your top losers in that order. But well, on that note, let's wrap it up on this edition of Closing Trades. We've managed to hold on to close to that 23,750 mark on the Nifty. Let's see what tomorrow's trading session holds for us. One last day of trade left, and let's see what that pans out for us like.